Today is Wednesday, January the 8th, and this is a market that just wants to go up, and it's going up on volume. So the Iranian thing caused the Dow to drop 2 days in a row now overnight, by a couple of hundred points, only yesterday to bounce back, and today to just not only bounce back, but really to take off right after Trump's announcement that he wasn't going to pursue any more. Well, he didn't say he wasn't going to pursue more military action, but he said that it looked like Iran had backed off. Now, I think that that's about as sound advice as saying that the China trade deal was 90% complete back in September. No one knows what the Iranians are thinking about. Just have to be prepared for the worst, in my opinion. Advancers led decliners. This is an updated look at the stock market at the breadth indicator, and you can see that it was a little bit below the neutral line yesterday. It's a little bit above the neutral line after today. So really, there is still a reason to be concerned. Let's take a look at the S&P, and let's take a look at the distance that the candles are from the cloud. Here they were about 163 points from the cloud back in November. Let's see how that's moved over time. Got a little bit further away at the end of November. 162.5 still. As we move along, we're keeping this distance of 162 away from the cloud. And so today, we're at that same value, 162.57. So we're keeping a line that's pretty much parallel to the center of the cloud. And if we put in a channel line, let's just draw a channel really quickly, and let's put our middle of the channel line right in the middle of the cloud. And this is an approximation, right? And let's look at where price is traveling. Price is traveling pretty much parallel to, where would you put the center of the line? Doesn't really matter. The point is that we're staying pretty close to the edge of the cloud, center of the cloud. And that's causing me still a little bit of nervousness. I don't know about you. Let's take a look at Apple. Huge, up to 178.6%. So these extended Fibonacci lines are really quite accurate. Here was our 100%. And that was a measured move, replicating replicating a move from this point right here. Actually, no. It's taking this move, this pullback, let's take that one out of the equation. Let's look at this one. This is the move from here to here, down, and bounced up. 100% retracement would be here. 138.2 was a test for 3 or 4 days. 160, this is weeks, sorry, 3 weeks. And this 161.8 was a test for a couple of weeks. And now we're at 178.6. So let's go back and look at it on the daily level. And look at all the times we tested 138.2, making that a valid extended Fibonacci line. 161.8, 1, 2, 3, 4 days. And the 178.6 now 1 day. So let's see if we can break through that. I'm not looking too much at the 188.7. The next one would be up at 200%. That would be 323. So a lot of the analysts' forecasts would come true if we get up to that point. Volume was pretty decent. Caterpillar still in that same channel, up $1.30. Home Depot, 327. That was a really nice move to end above the 50 EMA, just below the 50 SMA. Not much volume. Looks like we're going to run into the cloud. Remember, we had hoped we would be able to penetrate this thin portion of the cloud. Didn't happen. Now it looks like we're going to hit the cloud, maybe at a weak portion over the next couple of days, and if not, resistance will just get more serious. The Chiku span today had its high at the 8 EMA. The Chiku span got resistance at the 8 EMA 26 days behind the current day. Whirlpool is the other stock that we have, up $2.06, working its way through the cloud, looking at a flat cloud, which corresponds with a 50% Fibonacci. So I think it's headed to 152 and it'll be tested. Volume was a little bit low. Amazon was the disappointment today, down $12 on a day when so much was up. So if we go back and we look at the overall market, there was a lot of green and not a lot of red. Walmart was red in the services area. Don't know why they're a services company. Amazon was slightly red in the services, and the basic materials were down. So this is quite disappointing. Now, Shopify, I went and I learned a little bit about what they do. You should too, because now that we're over 100%, it's nice to know the business model, and I think that they have a good business model with more and more people going into setting up their own online businesses. If we have a move up tomorrow off of this 100% fib line, then we should definitely move into some call spreads, and I almost did that today, but I'm going to follow the rule that says look for a day of follow-through, and that would be tomorrow. There's another 178.6% fib line here that we had drawn that obviously was resistance for a period of time, but now we've broken out to the 409.61 100% pullback back to this high. Now we're starting to make new highs, so keep an eye on Shopify, and that's something that I would move into tomorrow. I didn't change any positions. I did close an Apple position which had made 95% of its profit. That was the 275, 280 call spread. I've still got the 290 300s and the 300 310s that are doing quite well. I still have the Whirlpool call spread and the Amazon call spread and Home Depot call spreads, which are now, Home Depot are now green again. So I'm going to be looking at adding Shopify and maybe some more to the current call spreads that I have if we continue this bullish trend tomorrow. But I'm going to continue to monitor the distance that the candles get away from the cloud. The candles have a history of liking to come back to the cloud and just double check with the cloud and test for support before moving up and not getting too extended away from the cloud. But it's actually quite extended now.